Good evening, everyone, and welcome to the Brian Crombie Radio Hour on Saga 960. So one of the big company stories, financial stories, real estate stories, potentially, market implication stories is Evergrande, a company that up until a short while ago, I'd never heard of. It's one of China's largest companies. It's the largest real estate development company in China, and they halted their stock on Monday of this week, and for the last little while, they've been in financial stress. And the questions are, what's going to happen to the company? What's going to happen to all the investors? They've so far suggested that they're going to pay Chinese investors and Chinese banks, but not non-Chinese. And so I wanted to reach out to an expert on China and talk about the political implications, the real market implications, the real world implications, and then also to a financial expert to talk a little bit about the financial implications. And so I want to introduce you first to Charles Burton. He's been on our show before. He's an expert in China. He's a principal with the Macdonald-Laurier Institute. He has been a professor of political science and an expert on China for over 30 years at Brock University. He formerly worked at the Canadian Embassy in Beijing, and he's a very, very smart guy. Mr. Burton, how are you? Welcome to our show.
Thanks for having me on, Brian.
My pleasure. So the company is called Evergrande, and it is, from what I understand, the biggest real estate development company in China. Tell us a little bit about Evergrande, if you could.
Well, it was founded about 25 years ago and has since diversified into other things beyond real estate, electric cars. They make mineral water. They own the Guangzhou soccer team. But it's an enormously capitalized company of about 308 billion US dollars. And has been building something like 600,000 residences a year.
600,000 residences a year?
Yeah. So, I mean, that's a lot of apartments.
That sure is.
270 some cities. But, China, yes, I believe so. China's economic model has really been build, build, build. And local governments have been able to generate money for their operations by expropriating agricultural land or, cheaper traditional housing and paying, not very much for it and causing the people who previously lived there to have to relocate, and then building luxury shopping centers and housing. So, this has been an ongoing model in China. In the case of Evergrande, or Hengda, as it's known in China, they got overextended. They had too much in the way of loans. The housing market has been overbuilt. Apparently, there's enough empty housing in China to accommodate a couple of European countries in terms of the numbers of housing units available. And the government imposed some regulations last year restricting the amount of debt that real estate companies can hold. So Evergrande was unable to borrow more money to pay off the enormous debt that Evergrande holds to 171 banks and 121 financial institutions. So you've got a situation where there are a lot of investors who are worried about if they're going to get their money back. A lot of people who have paid in full for housing which has not been built yet. When I purchased my own home in Southwest China, I paid the full amount when it was just an agricultural field. So it's quite common. And of course, all of the suppliers which depend on Evergrande construction, the trades and the concrete makers and so on, who are all facing devastating situations. So in general, I think it's a function of change in the Chinese economy. It's a function of the maturity of the Chinese market and the fact that this build, build, build model is no longer going to be sustainable. because they're grossly overbuilt, and China needs to develop a different sort of economy to sustain rising growth rates in the years ahead, probably more like a services-based economy as opposed to a, building things economy. So it's a tragedy in the making, and could have a lot of consequent effects, particularly if investors are concerned that there might be a lot of other companies like Evergrande, which are far overextended in debt and could similarly collapse. So, some people have...
so you're saying this isn't just a concern with Evergrande, it's a concern that might be wider within the Chinese marketplace.
Yes, I think that, there are problems in other real estate. Of course, it's the same situation. And we've seen dramatic video of, entire apartment complexes being blown up because they're half built and they're not very good. And, you see the tragedy of enormous buildings crashing to the ground. And so it's not just an Evergrande problem. And there's also, in general, issues in the Chinese economy relating to the extreme restrictions that were imposed over COVID-19. And more recently, in the past year or so, the government has become much more interventionist in terms of social programming, regulating companies and making demands on them, which didn't previously exist. For one example that's been quite popular has been the Chinese government's restriction on how many hours a week children are able to play computer games, cutting them down to, I think, 3 hours a week. Certainly a lot of us in the West would probably support that kind of policy, but naturally devastating to the computer games industry. But it's all part of the Chinese government becoming much, much more interventionist in the economy. And, we know how that goes when you get more state intervention in an economy. It causes all kinds of problems. And so this could be the beginning of a bad scene. Some people are comparing it to the collapse of Lehman Brothers, that it could have that kind of cascading effect on the Chinese economy. And the government does not seem inclined to bail out Evergrande at this time, for fear that it would set a very bad precedent for other companies that may be in similar straits.
Charles, that's exactly what the U.S. government, the SEC, and the Treasury Department said about Bear Stearns and Lehman Brothers, to their regret. And then they had to change course when it ended up being Goldman Sachs, AIG, and other people that were potentially in financial collapse. And still, we ended up having the global financial collapse that we had in 2008, 2009. So if Evergrande is at all comparable to Lehman Brothers, won't the Chinese government have to step in?
Well, they either save the company or they compensate the investors or the people expecting housing. This would be a devastating thing for a lot of investors. The housing in China is so expensive in comparison to income that it becomes a major drag on the overall economy. Not to speak of the fact that, a lot of this is due to poor regulation in China, the fact that lending institutions like banks are so closely associated with the Chinese Communist Party governments in localities that a lot of those loans were made, I think, for the profit of local officials who have some stake in these development deals against, proper economic calculations. In other words, it's evident that China did not need that much new housing and construction, but it still continued to soar ahead because, there were people in power who had an interest in seeing this continue. So it's something to do with the folly of government. I am concerned about where the Chinese economy is going as the government becomes more interventionist and wants to engage in measures to reduce the gap between the sort of robber baron element associated with the party that's become so fabulously rich in China, when most of the population is still, down there in the lower income range. China is the 181st country in the global UN rankings in terms of per capita income. So it's not a wealthy country per capita. It's just an enormous country with a huge economy based on the fact that it takes up 20% or more of the world's population. But you have a situation where, there are 86 US dollar billionaires in China's National People's Congress, their rubber stamp legislature, whereas a lot of people, would be hard pressed to buy a cup of coffee in Starbucks. So, these are issues that the government's facing and is trying to deal with sort of late in the game, and the economic stresses and strains are coming forth. And of course, if things go wrong in the Chinese economy, it has an effect on us in Canada too, because it's such a major power in the global economy and trade.
86 billionaires that sit in the People's Congress. Is that what you said?
Yeah.
Unbelievable. We're chatting with Charles Burton, an expert on China tonight, about what's going on with this big real estate development company in China that appears teetering on collapse, and that some people think might be the next Lehman Brothers. Stay with us. We're going to take a break and come back more with Charles Burton in just a minute. Welcome back to the Brian Crombie Radio Hour on Saga 960. We're chatting tonight with Charles Burton. He is an expert in China. He's with the Macdonald-Laurier Institute right now. He has been a professor at Brock for 30 years. He's been previously he worked in the Chinese embassy, the Canadian embassy in Beijing. He took a course at Fudan University in Chinese philosophy. Really fascinating background. And I've been honored to have him on my show talking about a couple different issues. We've talked about the release of the two Michaels and the Huawei CFO in a show just a week or two ago. Previously to that, we talked about Huawei and 5G. And previously to that, we talked about Chinese interest in the Northwest Passage and military establishments and mines, potentially in the Canadian North. And so it's been a fantastic series of conversations that I've enjoyed with Charles. But this might be, I think, the most impactful one, because it could actually impact our day-to-day life if some people are right that this is anything like Lehman Brothers. And lots of people have been saying, and we're going to, after the next break, talk to Mark Wachowski, the president of Mercantile Mergers and Acquisitions, about the potential impact on the financial markets. But he and others are saying that this could potentially be as traumatic as the Lehman Brothers collapse and the Bear Stearns collapse and the global financial collapse in 2008, 2009. And just to give that some flavor, Charles, Evergrande stock is down 80% this year. They've got over, as you mentioned, $300 billion in debt. The vast majority of it is debt to foreigners, not to Chinese investors, and so it's numerous, like over 200 foreign banks, financial institutions that have lent money. They last week made payments on only 10% of their debt, which was only payments to Chinese investors, and they haven't decided yet whether they're going to make investors to foreign bondholders. They have $47.5 million owing in interest payments Wednesday of this week. So it's an astounding amount of money they got to come up with. And now that they're down 80% and their stock has been halt traded, they're talking about potentially selling for $5 billion to another Hong Kong-based property development company. So it would be, a real come down for the company. And you got to ask yourself whether that company is going to take on all the debts and pay all the interest payments. They also last week sold 20% of a major bank that they held 20% of, Shengheng Bank, for $1.5 billion, a commercial bank in China. And so I guess, as you're saying, they're intertwined within the Chinese economy in lots of other ways. But I love this statistic. Their total liabilities are equal to 2% of the Chinese gross domestic product. So it's a huge impact. And as you also said, Charles, this is only one of a whole slew of property development companies that have been building a huge amount of homes. And as you know, I spent a little bit of time at Fudan University Business School. And at that point in time, we were talking about the Chinese real estate market being overvalued. And lots of people have been commenting that the Chinese real estate market has been overbuilt and overvalued for a decade. And they did in Canada, and there's never been a bubble burst. And they did in the United States up until 2007, 2008, and the bubble burst. So what would happen if the property market, real estate pricing bubble in China actually burst, that this company went sour on its debt and didn't pay the interest holders, as you say, didn't complete the homes that lots of people have made money. What would be the impact on China and the world, do you think?
Well, I think that, certainly if you look at a company like Evergrande and so many other Chinese companies, their accounting is not very reliable. They really don't maintain international standards in reporting of income and debt situations. And frankly, there's a lot of corruption involved and a lot of people who are making big money off these deals. And so, as long as the Chinese economy is booming, Western investors think, oh, let's get in on that, even though, maybe those investments are not made on sound economic criteria. Well, now that we've seen this collapse, of course, it'll really discourage a lot of investors from going back into China for fear that they could be putting their money into the next Evergrande. And probably a lot of people will be trying to get their money out of there. And, it's a function of the nature of the Chinese system, the lack of transparency, the Chinese Communist Party sort of inside dealings, the relationship between Chinese civil servants and major developers that makes it a very challenging environment for us to feel confident in dealing with. I mean, you're hard pressed to find very many Chinese officials, virtually none, in fact, whose lifestyle is any way comparable to their official salaries. I mean, even the president of China, Xi Jinping, officially only makes 21,000 US a year, but yet his daughter, attends Harvard, or did attend Harvard University, which has pretty high fees. So you see a lot of concerns here about the prospectus of these companies that just doesn't meet the kind of standards for investment that we expect for our own investments. And, the fact that a lot of people are going to be losing a lot of money is more or less almost inevitable. I mean, this was just not going to go on forever. And so, in some ways, I have sympathy for the foreigners who put their money in there under possibly false pretenses. But on the other hand, if you're going to invest in China, it's a higher risk investment than investing in something in the West, where you have more assurance that their valuations and operating costs and everything else are reported in a more transparent way, so you know better what you're dealing with. I mean, nobody had any idea that this was going to happen until it happened.
But 300 billion is a lot of money.
Well, I mean, it's a staggering amount of money. And as you say, in China, 2% of their gross domestic product. I mean, even in a nation of 1.5 billion, $300 billion is a lot of money. And that's in debt. And, how much are the assets worth, and what's going to happen to the prices of apartments in China? I think they're going to go down. I own an apartment in China. The valuation from when I bought it in 2005 at 70,000 is probably pushing up to 400,000. But I've heard recently that its value is becoming more rational. Well, I think that's normal. I mean, how can people whose income is, say, 15,000 US a year afford to purchase a $300,000 or $400,000 home? It doesn't make any sense. And the profits in those things must be huge. The cost of the concrete and steel and glass to make the building would be substantially less than the amount of money that's being charged for it.
So Lehman Brothers was the biggest bankruptcy in U.S. history, and it was $619 billion. So this would be half the size of Lehman Brothers. But from everything I've heard is that Evergrande is not the only property development company in China, and not the only property development company in China that's overbuilt and is overlevered. Is that? Yeah,
they're all in that situation, because there's just too much housing stock. They've just built and built and built, and they didn't stop in time. And evidently the government didn't seem to recognize that this was going to lead to a serious problem for the country, which.
So the triggering of the bankruptcy of Lehman Brothers caused a 4.5% drop in the Dow. The trade halting today caused a 2.3% drop in the Hong Kong index.
I mean, it's very substantial. And I mean, the main thing is that, you know, we do have concerns about other Chinese companies. And so this could be just the beginning of a disaster. And of course, in a country like China, you know, where they don't have social welfare or, you know, an efficient social welfare system, and a lot of people are living on the edge, economic disruption has devastating consequences. I mean, just think of all the construction workers who, you know, are suddenly out of work because the company is got to stop building because they don't have the money to sustain that. What happens to those people? You know, where do they go? There's no social welfare net for them. So it can lead to serious social disruption as desperate people start to protest violently and demand that the government do something.
When I was in China, I was told that almost everyone was investing in real estate, that they couldn't take their money out of China because of restrictions, though I think a lot of people did, but there were official restrictions on taking your money out of China. And because of the ups and downs, in the stock market, there was lots of distrust of investing in the local stock market. So everyone was investing in real estate. And if this triggers a property collapse, that's going to be devastating on not just construction workers, but the whole economy, is it not?
Yeah, I think so. I mean, my wife, who is Chinese, you know, believes in real estate and investment because it's a solid thing that you can see, and really wanted to put our retirement into Chinese real estate. I'm feeling grateful that I was skeptical of that idea, and it didn't happen because, you know, I could be having to give up my property as well. But, you know, I think it's a psychological thing, and there's a sort of Chinese tradition of this. And I think a lack of trust in paper money, you know, stocks and bonds and so on, just because the nature of the Chinese system doesn't inspire confidence that promises of interest payments and bonds, or, you know, that you'll actually get that pension that you've been paying into is going to happen. You know, they haven't got that degree of trust in the economy. So owning a house or several houses is something that people have some confidence in. And you know, it also applies in Chinese investment in Canada, which has largely been in taking money out of China and buying bricks and mortar in Canada.
The other thing that people were worried about in the past, and I just haven't heard of it recently, was Chinese state-owned banks that often acted, we were told, people spoke about, as arms of the government, that they made uneconomic loans to industries and to property development companies to spur the economy, and often to companies that may have had connections with government officials or whatnot, but they may not have been made on the most economic bases, and that they were over-levered, and that there was a correction waiting to happen with Chinese state-owned banks. What do you think of that?
Yeah, I think that's it. I mean, you know, the banks are functions of the local government. And if the local government, who have an interest in a development project, direct a bank to give a loan to somebody, they really don't have any means to carp about it and say, well, this isn't a good idea because you know, based on the borrower, they're not a good bet for lending. And so you do have these banks which are overextended in unwise loans because of political pressure. And so there's another issue that, you know, is in the Chinese economy that doesn't bode well for the sustainability and modernization of that economy to international standards.
So we're going to find out more about this, you know, in the next short while. We may find out more by the time this show airs, because the stock has been halt traded. They're going to have to come out with some news shortly. They're going to have to come up with $45 million worth of interest payments by Wednesday. They're potentially going to be sold to another company. They have more than 80% of that $300 million of debt owed to foreigners. And so therefore, if someone's going to step in to save it, I just can't believe the Chinese government's going to step in to save foreign financial institutions. They may step in to save the Chinese investors and the Chinese property owners and the Chinese construction workers, but I can't see them stepping in to save 80% of $300 billion worth of funds owed to foreigners. So it's going to be a really interesting thing to watch. And it's to put it in perspective, Evergrande is ranked 122 on the Fortune 500. So it's a sizable company.
Well, it's not a happy story, that's for sure.
It's going to be one to watch. Charles, I appreciate you joining us and telling us a little bit about it. After the break, we're going to be joined by Mark Barkowski, who is the president of Mercantile M&A. And he's been watching Evergrande closely, not from necessarily the political and local economic lens that Charles Burton has been looking at from, but from what's the potential impact on the stock market in Canada and the United States and the debt markets and the general economy. And he is worried that we're in bubble territory in lots of different markets, the stock market and the property market in Canada and the United States. And yet, because of all the money that governments have put in because of COVID-19, we've only grown that bubble. And he's wondering, is Evergrande going to be the prick that bursts the bubble? Stay with us. Mark Barkowski in just a minute. Charles Burton, thank you so much for joining us, sir.
Thank you again.
Stay with us, everybody.